Hello, I'm Coach Cory, financial coach with Financial Journeys. I've been thinking a lot about credit cards lately. Many say cancel them, pay them off, get rid of them, they're evil. Other people say to keep them around because of the benefits, whether it's cash back or whether it's travel points. So there's a lot of different opinions on credit cards. The one thing that everybody does say about credit cards, though, is do not carry a balance. The amount of debt in the US is 10 times the amount of cash that is in circulation currently. I mentioned this in one of my previous videos, this one right here. So today we're going to talk about one of the techniques for paying off credit cards, the credit card shuffle. What the credit card shuffle is transferring your high interest credit card debt to credit cards that may have introductory offers for low to no interest. Now, we only use this technique as part of a debt payoff plan because it can damage your credit in the short term. It can help in a long term because it's always better to have your debt paid off. Credit cards are one of the most aggressively marketed services anywhere. These companies will do just about anything to get your business, including offering introductory periods of 6 months to 2 years with 0% interest. The credit card shuffle takes advantage of these introductory periods to help pay off your balances faster and with little to no interest. The first step in this process is to stop using your credit cards. Throw them in a drawer, lock them in a safe, or even cut them up. If you're not ultimately looking to eliminate credit cards from your financial strategy, you can always order replacement cards once they're paid off. The next step is to take a look at your current debt load and figure out how long it will currently take to pay off. If you have less than 6 months remaining on your credit payments, chances are there isn't much advantage to using the credit card shuffle. With more than 6 months of payments remaining, you can start with pulling a credit report. If you haven't pulled one in the last year, there's a link down in the comments where you can pull your credit reports for free. Having a recent credit report will help eliminate any of those surprises along the way. To qualify for a new card and balance transfer, you're going to need a credit score of good to excellent, so 670 or higher. If your score is too low or you're delinquent on some of your debts, you will need to take some action to increase your score and get current on those debts. Then once you confirm that you're likely to be eligible for a new card and balance transfer, now it's time to look for the best offer. We've all received the junk mail, whether it's in the inbox or in the mailbox. Credit card offers show up all the time, and they usually wind up in the trash. But now it's time to make them work for you. You can also check with your local bank or credit union. You can check websites such as NerdWallet or Mint.com, where they give you a listing of offers, comparisons, and reviews of them. What you are looking to compare is the introductory interest rate, preferably 0%, the length of time that this interest rate is offered, and the percent that they're going to charge you for the balance transfer. You can also talk with your credit card company, let them know what you're doing, and see if they've got anything comparable that they can offer you. You're now ready to apply for the new card. You've picked the offer with the best length of term, the lowest transfer fee, no annual fee, and 0% interest rate. Once your application comes back, usually within a couple minutes online now, make sure the terms are the same as what you were signing up for. If your credit score is a little low, they might come back with a different offer than you were applying for. If the terms are still good, you can accept the agreement and finalize your account. Once finalized, you're ready to submit the transfer request. Hopefully, you were approved for the full amount that you have on your high interest credit cards. If not, that's okay. We'll go over what to do in a minute. Hopefully you were approved for the full amount that you have on your high interest credit cards. But if not, that's okay. We'll go over what to do in just a minute. It can take a couple of weeks for your transfer request to process, so while you wait, please make sure you continue to make your payments. If you weren't able to transfer the entire balance, you can either focus on the smaller of the two balances, like the snowball method, or focus on the higher interest rate and get that payment knocked out quickly. Hopefully, these are one and the same. and can be paid off in short order while making minimum payments on your new 0% interest balance. If you decide to cancel because you're eliminating credit cards from your financial strategy, you'll likely take a small hit to your credit score. This won't hurt you in the long run because as you work to eliminate all of your remaining debt, your credit score will recover and improve. Now with your 0% interest rate, remember to make those payments on time, pay more than the minimum due, and try to have the balance paid off during the introductory period. And most importantly, don't use your credit cards. You can't pay them off if you keep putting money on there. Thank you for watching. If you found this video helpful, give me a like and drop a comment down below. Follow my channel for more tips on managing your money and getting out of debt.